You're seeing a sharp cut, over 2% gone on the Hong Kong markets.
The data gave you the top line number, 263. 275 was the estimate. So in and around there, not much really to worry the markets. There was the revisions were up 11,000. Average hourly earnings still strong, 0.3%.
India has outperformed both in terms of currency and equities by a large margin.
Veteran investor Vijay Kedia has invested in Atul Auto, where there is a total 115 crore investment via preferential issue, out of which Vijay Kedia's contribution is about 100 crores.
190, a fast-changing screen, at least on the index level.
India has been a relative outperformer in the overall emerging market space.
We had current account deficit going up to about over 5% in December 12th quarter.
Both the boards today have approved selling their non-core assets.
Tata Motors is the biggest Nifty loser today after the Q2 JLR sales failed to impress the street.
The rupee had to start lower because it was a triple whammy day. Crude prices higher, dollar stronger, and US yields much higher than what it was.
As we speak, we've climbed above that 17,200 mark.
Well, that was the day so far. Hello and welcome to a fresh new edition of Closing Bell. I'm Prashant. With me, my colleagues Reema Tendulkar here in the studios and Nigel D'Souza on the newsroom floor. Guys, hi. I mean, outperformance and more outperformance. What can we say? But outperformance, I mean, this is incredible, isn't it? Day on day, week on week, month on month, and of course, year on year as well, it continues. Look at the market right now go. We are down 112 points, which basically translates to 0.6% cut. This comes after a near 4% cut in, what is routinely described as the mother market. I mean, I don't like that term, that phrase, but the big market, right? Off of which most other global markets take their cues. 4% fall, and you're off with just a 0.6% cut here. So it's just been incredible. But this is something which we've kind of gotten used to, right? This is something we explained in the morning as well. The impulse was very much there on Friday as well to try and buy the dip. Going into a big data point like the US jobs data, on Friday, and I made this point in the morning, the market closed nearer to the day's high than to the low. Now, you could call that bravado. Things could have gone south, but they have not. And what has happened in the past has happened again, which is that the buy the dip phenomenon has worked. We've come off the lows quite strongly, and we're down just 100 points, 0.5% in the face of a massive global sell-off. So I think that's extremely, well, you can say it, heartening, perplexing, puzzling, but that is what it is. Flows number should be interesting to watch later today, both DIIs and FIIs, especially on a day like today. The Nifty low today is 17,064. By the way, market has given up 50 points from the day's high, but that's okay. We are up more than we are down from the high. 17,064 becomes an important point. The day's high is just under 17,300. 17,280, I think, is the day's high. 17,300, by the way, is nothing but the 61.8% retracement of the full rise from the June lows to the recent high. So, the level to take out would be 17,300, immediate level on the upside. And on the downside, I think the day's low would come into play. IT stocks, and I was making this point in the morning, going into the earnings season, despite the NASDAQ fall, the 4% fall in the NASDAQ is bid. I mean, the index itself is up about 1/3%, and actually more, 0.6% now. And TCS will kick off earnings season later when we report. Reema, hi.
Hi, so the Nifty IT Index has recovered 2.5% from the day's low. It's been rallying for the last 4 days. So in the last 4 days, the Nifty IT Index from its close to current levels is up close to about 4%. The point is, just look at the way the positioning is. The positioning in the Nifty IT stocks is very low. The earnings expectations are also very muted, unlike, say, the banking stocks, where expectations are running high. So when the expectations are low, there is always a higher chance that the companies, even if they meet expectations or they marginally beat, there is a possibility of an upside. And I was looking at the way the FI holding in the large cap IT stocks have come off in the last 2 years or so. And if you could get those numbers up. So in TCS 2 years back in the September quarter, FI holding was 16%. It's down to 13.5%. Big fall seen in HCL Tech's FI ownership from 25%. It's down to 18%. Only in Infosys, the FI ownership has remained fairly resilient. But the point is that most of the street is bearish on the IT stocks, which is why the Nifty IT Index is down close to about 28-29% on a year-to-date basis. So when expectations are low, even a small beat can do wonders. So that's what we're going to be tracking on the top line as well as on margins, particularly for Infi, which reports numbers on Thursday. Watch for a buyback announcement because the company is eligible to announce a buyback. The cool-off period for a buyback ended in September. So if they want to do a buyback, now is the time. And there is another compelling reason why Infi may announce a buyback, because their cash flow return policy states that 85% of its free cash flows over FY20 to FY24 will be returned. That's their stated policy. But they have managed to return only 73% till FY22. They need to bring that number up, and they only have 2 more years, which is why the street believes there is a high probability that we could see a buyback. And again, let's, as we start this week, let's put up the earnings calendar up. A lot of IT, but throw in Bajaj Auto, Shree Cement, now not a Nifty company, but Shree Cement also reports numbers on 14th, and on Saturday, 15th of October, will be HDFC Bank. And of course, a lot about the IT stocks, Nigel.
Well, that's right. Hi, Prashant. Hi, Rima. You guys are talking about the outperformance, right? And the Nifty is doing pretty well. I think we should get the intraday chart up for you on the screen. And, the reason that the Nifty is doing pretty well is because the Nifty Bank, it seems that the bulls, they want to defend that mark. And they want the Nifty Bank to hover around the 50 DMA, which comes in closer around 39,100 odd. So the Nifty is outperforming, but the Nifty Bank is even outperforming that. It's down only around 0.3%, while the Nifty is on closer to 0.5% odd. And that's the one that's really bucking the trend. So even in Friday's trading session, we did see it went down to around the 38,800 odd. From there, we saw a bounce trade, went down to around 38,600. And from there, we got a bit of a bounce. As I said earlier today, that seems to be the joker in the pack, though for the time being, till we see some bit of a pullback on the Indian rupee, or till we see crude oil prices, see a correction of a few percentage points, only then the bulls will be feeling reasonably good. Otherwise, at higher levels, we are seeing some supply that's coming in there. Let's see how the final 60 minutes does pan out. But first up, let's run you through what all we have lined up on the show for you. It's a weekday on the Lal Street with the key indices clocking in losses of nearly around 1%. The consistent underperformer of the day is the mid-cap index, autos, banks, as well as pharma. Well, they as well drag in today's session. Tata Motors, the biggest loser on the Nifty today. The weak JLR sales for September on the semiconductor shortage, even as demand for its key models remained very strong. Analysts see this delaying Tata Motors' deleveraging strategy. Details lined up on the show. Bandan Bank also slides in trade. This on the back of a tepid showing in the second quarter. We'll get you a glance into those numbers later on. And the stock of India Bulls Housing Finance, it hit lower circuit intraday. This after the Enforcement Directorate moves the Apex Court to challenge the Delhi High Court's order of quashing a probe against the company. We'll get you the latest updates on that front as well. And finally, Sridhar Bhattacharya of Edelweiss AMC will be joining in to talk all things market, as well as how we see things shaping up. Let's see how the final 60 minutes move on. All that and more on Closing Bell.
All right, so that's a lineup here and what's coming up. Well, let's tell you how to position yourself in the last hour of trade. Mitesh is here to help us do that, help you do that. Mitesh, good to have you here. So, the dip's been bought and so far well behaved with a 100-point cut. What would you do?
Good afternoon, Prashant. I think you were highlighting the contribution of Bank Nifty. You can add Nifty IT to it. I think those two indices still look pretty okay to me. And that is why the Nifty possibly, did not break below the 16,980 zone, which is the 200 average area. So we got a low of around 1765. But I think, very clearly this zone of 17,100 to about 16,980, I think till that has been broken, I would not want to go short on the markets. On the upside, I think, yes, again, 17,280, 300 zone needs to be taken out before you can venture out on long. So it's a market which is, kind of trying to find its directional bias. But looking at the Nifty IT and Nifty Bank, I have a mild positive feeling that, eventually we could see a break on the upside and head towards 17,450, 500 zone. Having said that, I have a buy on HCL Tech, and traders can possibly look at a stop loss just below today's low of 942. So 941 is what I recommend, and a target of around 980 on the upside could be tested. And I had a sell on ITC a few days back. Again, I think it's on the verge of possibly giving some kind of a corrective pullback. It needs to break 325 though. So sell below 325, then keep a stop at 330 and look for 315, 314 as the first target. Eventually, it could possibly give a pullback to about 308 levels.
Mitesh, thank you very much for that. We'll come back to you. Despite many multiple punches thrown by the US markets at us, we're down, but there hasn't been a knockout punch. We're just down about 0.5% on the benchmark indices. Nishal Maheshwari, CEO of Institutional Equities and Advisory at Centrum Broking, is also joining us on the show now. Nishal, afternoon, and thanks so much for joining in. Well, all eyes are going to be on the earnings season, and increasingly the murmurs are that perhaps we are overestimating the EPS growth for FY23 as well. Consensus is closer to low teens kind of an EPS growth. But given the way commodity prices have been, the impact it's going to have on metals as well as oil and gas, the overall EPS increase may just be in high, single digits. Your thoughts, and what impact is it going to have on valuations and the way investors view India?
Afternoon, Rima. I think FY23, I think there will be, by the time the year closes, there will be a lot of changes. We are also at the moment closer to high teens, basically. But my estimates are basically that as we go along and as we get more clarity, especially on the US and the deep down as far as the recession is concerned in the US, the depth of that, basically, I think the numbers will be cut here. So it should be closer to 11-12% kind of a number, basically, is what we'll eventually end up with. That's what my take is on this FY23 earnings.
Right. Look at the IT space go. I mean, it's I think added another almost 0.5% from the time that we started the program, which is the last 10 minutes or so. Just a vertical move. Yeah, it is the Nifty IT Index. And let's just look at the constituents. Let's look at TCS, which is at the day's high. It is up 60 rupees. And again, a sharp move up over the last, I think, 20 minutes or so. Let's look at Infosys. I think Infi also has seen a sharp move. It's doing well today. Let's look at Wipro. Wipro numbers are expected to be decent. I mean, that's the expectation. But let's see. It's up from the day's low. It's up 0.5% or so, the least of the lot. HCL Tech, of course, has been the huge outperformer. That is also recovered from the day's low, but it is still down 0.5% or so at this point in time. Well, we'll pose these IT-related questions to Nilesh just a bit, but let's focus on Tata Motors for a bit as well. The stock is under pressure after JLR sales fell 5% in the second quarter. Sonia is here with more details on this one. Sonia, over to you.
Well, thanks a lot for that. I was going through the share price of Tata Motors over the last 1 year, and I noticed that there is a deep underperformance compared to the BSE Auto Index. So Tata Motors this year is down 18% in 2022, while the BSE Auto Index is up 16.5%. Now, what led to this underperformance? It's purely because of what's happening with the JLR business, because the domestic business has recovered in a big way. Now, JLR in Q2 reported retail sales that are under pressure. Both Jaguar and the Land Rover business saw a fall. In fact, the Jaguar business was down almost 10%, while the Land Rover business was down 3.5% in terms of retail sales. The company, though, is quite optimistic. They say that the order book remains at a record high level. There's very strong customer demand for the new Range Rover, the Range Rover Sport and the Defender, and the sales are expected to further improve in the second half of the year. Even if you look at the trajectory of the JLR sales over the past 5-6 quarters, they are not yet back to the pre-COVID levels, although the JLR sales have improved over the preceding 3 to 4 quarters. However, brokerages are not very bullish. JP Morgan has downgraded Tata Motors from an overweight to a neutral. They say that with this, what happens is the weakness in the sales will cause a delay in the timeline of deleveraging. Now that zero net debt target could get pushed beyond FY25, and that would bring in a little disappointment for the street. The miss this quarter around, though, is driven by supply chain constraints, and the wholesale sales have definitely disappointed on both Jaguar as well as the Land Rover front. Back to you.
Okay, all right, Sonia, thanks a lot for that. Well, Nishal, what do you make of the stock? It's under pressure, one of the big losers today. Though, if we don't get a very deep recession, then this is one of the global plays. Your take on the stock at around this 395 rupees odd?
Yeah, I agree with you, basically. If there is not a deep recession, obviously, I think that Tata Motors could be a beneficiary of that. But I think given what we are looking at, a very sticky inflation across the world, definitely we believe basically that US will, in one of the quarters, will have a recession, and that should impact the both sales for JLR across the world. And I think at this prices also it is avoidable. We see lower levels for Tata Motors.
Okay, that's Tata Motors for you. IT services, Nishal, what's your view? I mean, I guess positioning is very light, and we'll hear from TCS, the bellwether, later today. Could that spark a rally in the entire space? And what would cause stocks to bounce meaningfully from here, in your opinion?
So I think it's positioned well, Prashant, basically, given that everybody seems to be very light on the IT sector. And most of the domestic mutual funds and all, basically, they are pretty light. And as you were just mentioning, most of the FI seems to be also very light. But that is the only thing which is in its favor, basically. And we have yet to see, basically, that whether the attrition and the margins both have bottomed out. That is what is being expected by a lot of analysts, that last quarter would have been the worst, and this quarter we are going to start seeing stabilizing of the margins. But I think what everybody needs to watch out is basically what kind of order book or what kind of deal wins basically TCS announces, and what kind of outlook it spells out. I think those are the things basically. I think what the major worry on the street is the growth. And if things start working out there, I think then all IT stocks or some of the IT stocks should be a buy from these levels.
Okay, so recovery in growth or sustenance of growth and recovery in margins will be key. Nishal, do stay on. We've got another important story to track. Indiabulls housing finance tanks after Enforcement Directorate moves the Supreme Court, challenging Delhi High Court's order to quash the probe against Indiabulls housing finance. Ashmit joins in with the details. Ashmit.
Well, it was just this last month in September that the Delhi High Court had quashed the ECIR that served as the basis of the ED investigation into Indiabulls housing finance. What's important is that this ECIR also served as the basis for ED search and seizure operations, as well as various lookout circulars that had been issued against members of senior management of Indiabulls housing finance. Now, the Delhi High Court had held that the FIR that serves as the basis of this ECIR has been done away with, has been quashed, and therefore the ECIR cannot survive. The ED investigation cannot survive, and therefore needs to be quashed. The ED, we understand, has now challenged that order before the top court of the country. The ED has held that there are various PMLA violations which are blatant, which cannot be ignored, which need to be investigated, and therefore the Delhi High Court order needs to be vacated, needs to be set aside, and that's the argument that they will be making. We understand that this argument is scheduled to be taken up today before the top court. The apex court is yet to take up this case so far. We understand it will come up in the later course of the day. Back to you.
Okay, all right. Thanks a lot for that, Ashmit. Well, for the time being, though, we'll slip into a short break. You come back. We'll continue our focus on markets. We'll also get chatting with Riddhi Bhattacharya of Edelweiss AMC. Stay with us. Welcome back. Well, for the mid-cap space, those IT stocks are doing well yet again out there. Mindtree has spiked up from the low point of the day. Just pull up the intraday chart out there. You have a couple of other names as well. Persistent System, that's the other one that's done reasonably well just in the last 30 minutes or so. And Coforge as well is another one in there. Ambuja Cements, remember the stock has corrected from more than 580 rupees all the way to around 500. The street is hoping that they're going to be getting a far more attractive acquisition that could be on the cards. That's at least what the street is speculating on. And that's why that stock as well, from the day's low, has spiked up a goodish bit. But the focal point continues to remain banks, and Bandan Bank is a stock that's under pressure post their Q2 business update. Abhishek joins us to tell us why those numbers looked weakish. Abhishek?
Well, Nigel, nothing home to write about the business update, especially on the loan growth front, and the fact that, retail deposit share is down massively on a sequential basis. So the book has remained flat as of Q2 FY23 when compared to FY22 numbers. The advances as of Q2 have grown by 21.7% YOY and about 2.8% sequentially. There is not a significant improvement in the collection efficiency. September September collection efficiency was at 97% when compared to 99% that they had in March. So the CASA ratio has dipped, hugely, given the fact that it's come in at 40.8% when compared to 43.2% in the previous quarter. The retail deposit share has also declined massively by almost 520 basis points quarter on quarter, coming down to 74.1% when compared to 79.3% in the previous quarter. So weak retail deposit momentum and the decline in CASA ratio has not worked in favor of the bank in trade today.
Okay, all right, Abhishek, thanks a lot for that. Nishal, what do you do with Bandan Bank? You heard what Abhishek had to say with regard to the quarterly update. Where does it come in the pecking order among banks, or would you prefer one of the other larger names?
So, Nigel, for long I've been a strong proponent of the large banks only. Today, if you look at large banks, the reach is immense, basically. Well-capitalized banks, their issues about the NPAs got all sorted. So there is no need to actually go down the ladder, basically, as far as banking is concerned. So I think I prefer the large 4 or 5 banks and maybe a couple of PSUs, that's all.
Nishal, thank you very much for joining in with your thoughts today. Look forward to chatting again very soon. Let's shift our attention then to the mutual fund data. Equity schemes have seen inflows to the tune of 14,000 crores in the month of September. Sumera joins in with the details. Sumera.
Hi, thanks very much. So equity schemes have seen over 14,000 crores of inflows this time, which is an improving trend. Certainly from last month, but about 5,800 crores of this money has come in through NFOs. And the categories within equity which have done well are the ones where there were NFOs this time around. So sectoral funds have seen the maximum amount of inflows, and over here there were 3 NFOs which have brought in about 3,800 crore rupees. There was a mid-cap fund NFO which has brought in excess of 300 crore rupees, and there was one NFO in the flexi-cap category as well, which has brought in about 1,680 crores. So this 14,000 number looks good, but 5,800 has come in from NFOs. The overall outflows from debt are largely on account of quarter-end phenomena where we see advanced tax payments, etc. go out, and the bulk of it is coming again from liquid funds. Hybrid funds is interesting this month because, on a net level, it's the 3rd or 4th month, I think, where we are seeing outflows overall from the hybrid category. Again, arbitrage funds are seeing outflows coming in, but interesting also that the balanced advantage fund, which was a very, very popular category, showing a number of about 500 crores plus in terms of inflow, but, net of the NFO which was there in the balanced advantage fund category, this category has seen outflows, and I think on a net level, this is an outflow probably for the first time in a few months. Passive funds, well, that trend continues upwards. So another month of 13,000 crores plus of money coming in, though here as well there was an NFO which has accounted for about 1,617 crores. In terms of SIPs, that trend continues to do well. So SIPs have clocked in about 12,976 crores. So tick by tick, that continues to rise. Back to you.
So, the net, which is the total equity inflow, X of NFOs and X of SIP, that is still, the discretionary portion is still negative, right? Okay, I don't think, Sumera, if you can hear me, yes. The discretionary portion of equity is still outflow, right? I mean, it's negative. X of NFOs and X of SIP, like it has been for the last many months.
Yes, probably yes.
Okay, all right. Sumera, thanks for that. That's the mutual fund picture. Tridi Bhattacharya is with us. He's CIO Equities at Edelweiss AMC. Tridi, good to have you with us here. Thank you very much. Just a word on, I mean, if you have any thoughts on the flow picture. So 14,000 crores total. 8 out of that is basically, or rather 6 out of that is NFOs, and then there is 12,000 which is SIPs. The discretionary number is kind of dwindled into deep in the negative actually for the last many months now. Any thoughts?
I think basically in a smaller period when you have a cluster of NFOs come through, usually you see this sort of a picture. But overall, if you look at the rising trend within SIPs and also the fact that the flows have continued to be on the positive, I think goes on to show the equity appetite for in general within India. which doesn't seem to be waning away, which is a good sign, particularly in the context of so much of global noise that we hear. I think this is a good place to be, probably kind of keeping our markets afloat overall. But yes, I mean, incrementally, what we are seeing, the discretionary part moving from lump sum to more like SIP or STP kind of investments. So the lump sum part of the investment has kind of, is still missing. And I think that number will swing around once you see the lump sum part also coming back.
Trideep, afternoon. What's the call on cement now? The competition appears to be hotting up even more. There are talks about how Adani Group is likely to bid for Jayaprakash's cement unit. What's the view now on the individual cement names, the sector as a whole, the competition dynamics, the supply demand?
So I think two parts to it, the structural part and the cyclical part. The structural part is that you have a new name entering into the industry. The good part of this is that there is no incremental new capacity being added, in the sense that there is no separate non-cement capacity being added. It's basically capacity changing hands. So to that extent, a new player coming into the industry is not that much of a risk as what it initially turned out to be. How aggressive Adani Group turns out to be will only be known over the next couple of years, as capacity on the cement side only takes a good bit of time to come through. But immediately, too much of capacity coming into the sector is not an issue. It's more capacity changing hands, and what they do with that capacity is what it is. So structural side, near term, okay, near term, over time, worth evaluating. From a cyclical standpoint, we are gradually entering into the season from the lean season, which will probably be reflective in the quarter that they will report, to basically more the demand season, the in season for cement, where generally cement demand tends to look up. So from that point of view, directionally, I would probably be a little more positive than I was with regards to cement as we are entering into the busy season. And given that we think that the real estate sector and the construction side of the economy are likely to do better, cement will also probably see some good days in the sun.
Hi, Trideep. Good afternoon. Trideep, I think for the last 1 year or so, you've been underweight IT, if I remember correctly. What's your stance? I mean, for 2022, it hasn't belonged to that space. This evening, we'll get numbers trickling in. Besides the numbers, the commentary will be important. But what's your stance out here? Still, there is a further correction before you get interested in the space?
So I think overall, there are grades of being underweight, right? So we had maximum underweight in and around September, October last time. That underweight position has probably narrowed. But if you ask me, even today, I would continue to stay underweight. And the reason why it is that way is because while the multiples have corrected, and 2023 or FY23 earnings have sort of, seen the hammer, FY24 is where the key uncertainty really lies. And unfortunately, none of these companies are going to talk about it in the upcoming result season in that order. I think the first time we'll probably hear is maybe in the next calendar year. So I think we're going to probably live with a bit of uncertainty, and from that point of view, the stock prices would react to the near-term data points, and the September quarter, from what I hear, is just about fine, which is what you are seeing in the share prices. But I think the key element of debate is still unanswered with regards to the fact that in the light of global recession or recessionary conditions, how does global demand stack up for Indian IT services companies in FY24? I would say the jury is still out on that one.
What is the analyst community? How is it broadly? And if you speak to 10 or 15 analysts, are they now coming around to the fact that maybe things are based out there, or?
I think it's very, very divided. So you've got a JP Morgan, Nirmal Bang, very bearish, but on the other hand, Macquarie is still very bullish on the prospects of Indian IT, and they believe tech spending is going to be the last to get cut. I think it all depends on how deep the recession turns out to be. So if it's a very mild, moderate one, tech budgets could stay intact. And as Trideep pointed out, I think the earliest clarity we will get is in January. That's when the budgets typically get set. So in Q3, we will have a clarity of what the budgets are. Because right now, at least, despite a volatile macro environment, the demand is resilient. And this quarter's numbers, next quarter's X of the furloughs will look good because it's a function of the deals which you've struck earlier, which you won 2 years, 1 year ago. You're executing it, right? So the numbers may not paint the picture. But, the IT companies are generally very cautious. They refuse to give you any forward-looking statement. So as Trideep pointed out, I think that uncertainty about FY24 will linger till, January. And
I thought that's the one sector which gives you maximum disclosure and guidance. Wipro, for example, puts out that one quarter
quarterly
guidance.
Infi used to, then they stop. But so now you've got an annual guidance from Infi, HCL, and Wipro in terms of quarterly.
Yeah.
But they're not going to tell you FY24. They're not going to come out and say.
But you don't know what you don't know, right? I mean, they don't know, so how can we expect them to kind of crystal gaze in that sense? And that's the problem. I mean, right now things are looking good in the US, which is the largest geography for most IT companies, and so numbers should be coming in good, and commentary should be quite okay as well. So will this be a trading bounce or something else? We'll see. Anyway, Trideep, what else are you focused on right now? I mean, lots moving around, and when you have these kind of very volatile markets, you do get big dips, and in individual stocks you may be interested in only to see recoveries. Are you seeing any opportunities like that with the volatility?
So
So
I'll tell you, to be honest, yes, the volatility sort of keeps us on on the tenterhooks. But what we continue to stay focused on is the high frequency indicators or the on the ground demand data. And I think that's what we have really on the face of global slowdown. The on the ground demand data still continues to be strong. Until the time there will continue to be opportunities. So the areas that we're seeing stronger demand, for instance, the festive demand in terms of the online sales continues to be fairly robust. I think the urban demand has held up quite well. The high frequency indicators show that the capex cycle is still very much on track. And I think the incremental data points on real estate side point towards in the positive direction. On the not so positive direction, of course, we have data points emanating out of rural India yet to sort of make a comeback. And of course, the global focused businesses have their own issues. So I think when I look at all of this, basically, and think from a portfolio construction point of view, I still think that domestic cyclicals are the place to be, and global focused businesses will probably have a bit of runway in front of them before we sort of, come to terms with how demand might meet supply and then take a call accordingly.
All right, Trideep, final question from my end before we let you go. Everyone's a buzz that the auto space is seeing a recovery and we're likely to see growth for the next couple of years that we haven't seen in the last few years. What's your view on the space? I recall that you were reasonably positive on the CV space. I think companies that had some EV exposure as well. Are you holding on to that stance? Because that's been a relatively outperforming sector. Go ahead.
Yep, I think when we spoke last, we talked about the chip supplies and how cyclically things might look better as commodities ease, and we are actually kind of getting into that part of the year when those things will play out. So we were very positive at that point in time. The valuations were truly in our favor. At the moment, we'll probably be a little more balanced than what we were then, but continue to remain positive overall on the auto space. But we are now more focused on specific pockets within autos where we think there could be more company-specific angles to the story rather than just about the sectoral tailwind, which is, I think, now consensus view.
Trideep, do stay on. We need to slip into a very short break. But on the other side, we'll also get you a check on what dealing rooms are saying in our segment D Street Chatter. And we also tell you what you can buy today that you can sell tomorrow. Calls coming in from our technical experts. Welcome back. It's time now for our favorite segment on Closing Bell, D Street Chatter. Nimesh gets us into an insight into what dealing rooms are saying. Nimesh?
Hi, Nivas. Again, it's a volatile day of trade. The Nifty is off highs. And again, there are fresh concerns of geopolitical risk, and that's putting a bit of pressure on the Indian markets as well. Though we recovered in the first half, but the flows are on the negative side. And again, I understand FI is going to be net sellers in today's market. So that's the overall feedback on the flows. I guess the sector of the day is clearly technology, and that's been the play out for the last few days as well, that there is a bit of buying back into technology stocks. TCS will report the numbers today evening. And there is an anticipation that maybe you'll see a bit of a pullback in all the technology names. So there is a bit of anticipation of strong numbers and hence a bit of recovery in those stocks there. I guess from a macro point of view, the rising crude and the fact that rupee is at new high is a bit of a concern in the near term, and that's playing on the sentiment as well. But from a flow point of view, FIs are still better sellers, and all the recovery is getting sold into. So technically, 17,300 seems to be a bit of a resistance, and 17,000 level seems to be a kind of a support. So we'll be in that range, but I guess the sector is clearly technology on renewed buying interest.
Absolutely. Mid caps are now starting to join the large caps as well. Nimesh, in terms of individual names and what you're picking up around that?
Hi Prashant. So in terms of individual names, the first stock is Axis Bank. Within the financial, that stock stands out today on very good volumes, and it's up 2%, largely on back of buy flows. And I understand one of the leading long-only fund seems to be an active buyer in Axis Bank. So hence, there is a bit of outperformance in that stock. That's the first one. The second stock is PG Electroplast. There was a block deal. Nearly 0.5% equity had changed hands in today's block. And I understand in terms of buyers, a domestic PMS was a buyer in today's block. So the disclosures will be important as far as PG Electroplast is concerned. So that's the second one. The third stock is L&T. Well, the stock is down 1.5% in today's trade, under pressure. But again, this is among one of those few large cap stocks which I understand there is a bit of buying interest back from larger FIs. So the volumes are on the higher side. The stock is down, but there is buying interest back at these levels in L&T. So that's the third one. And the last stock is India Cements. Again, that stock is buzzing in trade, up 2%. The street is anticipating some sort of a deal very soon, and largely it's going to be in the lines of deleveraging the balance sheet. So some stake sale is what the street is anticipating, which is likely to come very soon, and hence India Cement is buzzing in trade today.
Well, yeah, that's right, Nimesh. The India Cement is an interesting one. I just reached out to one promoter who's overseas. I am not sure which one is it, but we'll wait by India Cements. Clearly, there's a lot of buzz on that front. So we'll keep an eye out on all those stocks that are on your radar. Well, getting back to the markets, good recovery from the lows. We're down only around 85 points odd. Mitesh Thakkar is back with us. Mitesh, what's the call you have for us? Give us a word first on the index, as well as you must be having some stock selective action. Go ahead.
So Nigel, actually, I'm not looking at trading the index right now because we're not sure whether we'll get past 17,283 tomorrow. But if it does happen tomorrow, then I think there could be long trade. But I think what I'm very clearly bullish upon is the Nifty IT Index. Now, the Nifty IT is not a very liquid index to trade in the futures market. So you basically look at the components of IT index to trade. And I have given a buy on HCL like earlier. I now have a buy on L&T Infotech or a BTST on L&T Infotech. Here, keep a stop around 46.70, look for targets of 47.40. And on the negative side is Lalpath Lab, which is kind of trading at the day's low. So that's STBT with a stop at 23.86 for targets of 23.45.
Thank you, Mitesh, for that. Let's also invite Hemang Jani, the retail.
Okay, Hemang, thank you very much. Good speaking with you. Appreciate you joining in with all of that commentary and perspective. 70 points lower is how we will kind of close this day, which means that we will be at 17,245. The high today is 17,280, so about 40 points lower, but closer to the high like Friday as compared to the lower end. Banks and IT did well, IT more, and banks, of course, just about ending flat. Private banks doing particularly well. Names like Axis, etc. Pressure in largely consumer names. I mean, staples, consumer durables, and a bunch of other sectors as well. So let me just quickly outline. Tata Motors was the big loser on the Nifty with near 4% cut. Tata Consumer, another one which is down 3. Autos like Hero Motorcorp was down 2%. Asian Paint started lower, ends down 2%, and ITC was down about 1.8% as well. Gainers are Axis, as I said, near 3% gains there. There is TCS, which is up 2, Wipro, which is up 1.25%, and HDFC Life, which is up about 1.25% or so as well. Rima.
Well, the mid-cap index is going to go home with a cut of close to about 1%. Negative advanced decline ratios. We've got nearly 2,000 stocks closing in the red. Talking about the big winners, Idbi Bank surged 9% after the government started the process of divesting its 62% holding, along with LIC. Atul Auto, a big mover on very large volumes. Vijay Kedia will be investing 100 crores in the company via the preferential issue. Gravita, where Adya has made some investments, and they've restarted their aluminium recycling plant in Senegal. You've also got strength coming in on Ease My Trip. They've announced that bonus issue in the board meeting today. On the losing side, Bandan Bank was under pressure. The business update was very ho-hum, negative fairly. Stock ending with cuts of close to about 2.7%. And in terms of the unusual movers, it was Garden Reach, 16.5% in terms of a stock price movement, very large volumes. The stock has doubled so far this year. So defense stocks continue to see a lot of interest, Nigel.
That's right, and a few of these railway-related stocks as well did pretty well. Ircon was up close to around 5.5% in today's trading session. Add to the list a couple of other names. You had RVNL, well, that stock was buzzing in trade. IDFC, the stock is moving very, very well. IDFC, First Bank did well, but there seems to be a bit of an arbitrage opportunity as well because both of them are moving in tandem. At some point of time, maybe IDFC catches up, on the upside. So that's something that the street is playing out as well. In terms of other big movers in today's trading session, we should get some of those big gainers. HLE Glasgow, we highlighted that stock as well. Volumes are rather large. Let's see whether or not there is any kind of name that comes out because of the large trade that took place. But besides that, you had Rossel India, that was up close to around 10%. You had Honda Seal Par, well, that stock as well was higher in today's trading session, up close to around 9% odd. And Brightcom, well, that one's taken an absolute hammering from the recent pick, but today it seems some bit of a relief on that stock as well. So let's wind things down then. The Nifty, a relative outperformer yet again, down only around 60 to around 70 points by the time we wound up. The Nifty Bank, that's the start in there, almost moved into the green towards the end of trading session. Intraday, it did move into the green. And the reason that the Nifty was relatively unhurt today was because the Nifty Bank saw a big recovery and the IT index as well did pretty well in today's trading session. Breadth of the market, you had one stock that was advancing for every two stocks that were declining. Well, on that note, though, we'll have to wrap up on this edition of Closing Bell. Thanks so much for watching. You don't go anywhere, though. Money, money, money comes up next.